As we enter November of 2025, it feels like we're falling further and further into a fourth turning. And as we do that, it seems like battlefields are developing on multiple different fronts. And that's what we're going to talk about on this week's episode of Milkshakes, Markets and Madness. And those who tune in on a regular basis will recognize that I am not in my typical setup at my office. I am actually in San Francisco today. I've been here for a few days for meetings. Then I go to Dallas for a few days and then on to New Orleans for the New Orleans Investment Conference, where I hope to see some of you in person. But I had a really kind of a fascinating conversation with a friend of mine today in San Francisco. And I thought what we would talk about today is I would just kind of rehash that conversation because it was really kind of, as we talked about it, I realized there's just so many different ways that this can go and so many different battles that are going to be fought. And while the big ones are kind of obvious, some of the smaller ones could actually become very big, and they may be even more important than the obvious ones. So what I did is I just kind of highlighted some of the points that we made. And I'm just going to kind of walk through them. We're not going to have a lot of slides, and we're not going to have a lot of graphics this week, but I'm going to use these bullet points to just kind of help make the point. And then maybe we will dig into these deeper in the weeks ahead. But it was really all kind of predicated on the recent piece we put out on our Santiago Capital research site called Empire by Code. And this was about the rise of stablecoins. If you haven't already subscribed, if you go to research.santiagocapital.com, you can subscribe, and for between now and Wednesday, for the regular premium $3.99 a year version, you get this pro level report, which is on the rise of stablecoins. And this rise of stablecoins paper is what generated the conversation I had with my friend today, because he had read it and he had a number of things to talk about and discuss it, and it just kind of became a really interesting conversation. But what we basically said is, multiple financial wars are being fought simultaneously, and each of them are perhaps a smaller battle and a front for a much larger conflict that's really all about global power, money, and control. And we've talked about that many times on this channel. But the most obvious one is the US or the West versus China and the global South. And as we've discussed many times, this is really a Game of Thrones. And this is the big, big game. And it's really for not only financial supremacy, but economic supremacy, geopolitical supremacy. Basically, it's all about power. And it's not just about current power, but it's who is going to set the rules, who is going to build both the geopolitical, operational, and economic architecture off of which the world will run for the next several decades, and who ultimately gets global seigniorage. We've talked about the power of seigniorage and how that is probably the biggest weapon that the United States has. And really what is ultimately at stake is who has global sovereignty. And again, what sovereignty basically means, you are beholden to no one. It's ultimate power. And it kind of goes back to, I've joked many times about, with the dollar milkshake theory, that there can be only one, right? And that's how sovereignty really is. There is really only one sovereign, because there's only one entity that doesn't have to answer to anybody else. Everybody else has a boss, so to speak. And that is why even when the sovereign does have sovereignty, everybody is always trying to take them down, because nobody wants to have a boss. Everybody wants to be free to do whatever they want. And having global sovereignty is the big, big prize. And so that's the big, obvious battlefield that is taking place. And I think everybody can obviously see that one. The other one that, again, I think is relatively easy to see is paper fiat money versus real assets, right? And while the dollar is pretty entrenched as the global reserve currency, it's not necessarily entrenched as the global reserve asset. US Treasuries are losing their share of global reserves, and gold's share of global reserves is rising. Now, we talked about this last week, I think maybe for the last couple of weeks. And one of the reasons this is happening is based on the price. As Treasury prices have come down and as gold prices have gone up, the two percentages have converged. Now, a lot of it has to do with price, but price is a reflection of movement in the markets. So it is a real thing, and it is something that should be aware of. And in many ways, it's a shift from paper promises to tangible stores of value. I think that is going to continue in the years ahead. And I think anybody who thinks that fiat is a great store of value over long periods of time is wrong. And this is one of the reasons why investing exists. Sitting in paper fiat or sitting in cash is not a great long-term strategy. Doesn't mean you shouldn't have some cash, but you obviously don't want to do that with your entire portfolio. The other battle that's going on is fiat versus fiat. Now, in many ways, the dollar has already won this battle. The US dollar dominates currency markets and trade and invoicing, and even from a reserve standpoint, it still dominates all other fiat. So there's not really a big competition between the United States and its fiat peers. But what is happening is that this is now kind of morphing into the digital fiat era. Now, in some ways, you could argue the dollar is already digital. Much of us, transact using credit cards and wires and, digital payments, but it's not, but we haven't really had, quote unquote, the dollar as a CBDC or a stable coin until the last couple of years. But I think that is really starting to pick up. And I think that is going to become a new battlefield. And that is what we wrote our paper about. And we think that this is as big a deal as when the United States left the gold standard. And we think this is going to have huge implications for not only the United States, but for the world in the years ahead. But if we get back to this digital fiat versus digital fiat, we believe the introduction of US dollar stablecoins, it's going to reinforce the dollar's dominance. Even if treasuries are no longer the global reserve asset, we believe the dollar will remain the global reserve currency for a very long time. And part of the reason is these digital dollars, especially once the United States kind of gives us its blessing. And the United States can do things to encourage stablecoin use. They haven't really done it yet, but they could easily do it. And when that happens, we think the digital dollars can erode other nations' sovereignty. And we explain that in the paper that we wrote. And this is part of the reason why we think it's such a big deal. As other economies become dollarized through digital code, that takes power away from the local authorities and they lose the sovereignty. And in many ways, the United States then, at least from an economic perspective, has power over those economies, even though they're not US political jurisdiction. Now, the other battle that we think is going to come, and I'm sorry, these slides are a little, for some reason, when I upload them, the formatting changes. I don't quite understand why that is. But the other battle that we've talked about a little bit, but I think is going to become a bigger deal over the next year or two, and it's been kind of a big deal over the last year, is the executive branch and the Federal Reserve clashing. I think we're going to have a big battle between the Fed and the US Treasury Department. Now, remember, the Treasury Department is part of the executive branch. So when the president is not happy with what the Fed is doing, it's often the Treasury, the department that gets involved. And, clearly Trump wants lower rates and has been pushing for that. And so and Powell has not been wanting to accommodate the lower rates as quickly as Trump would like. And so that tension has been resurfacing. And a US dollar stablecoin could really potentially help this, because depending on how it is used, it could help shift monetary policy, which is the purview of the Fed. Typically, just from a historical perspective, the Fed is in charge of monetary policy, but the Treasury is in charge of dollar policy. Now, it sounds contradictory because those two are kind of the same thing, but that's historically how it is. But with a stable coin, especially if it comes from the Treasury rather than the Fed as a CBDC, it has the potential to shift monetary policy away from the Fed and to the Treasury. Now, the Fed is not going to like that. Nobody likes giving away power. Nobody likes being beholden to someone else. It kind of goes back to the sovereignty thing. And so I don't think the Fed is going to willingly hand over their roles and their means of controlling monetary policy to the executive branch or the Treasury. But I also don't think the Treasury is going to back down and just say, okay, you guys go over there, the Fed can do whatever you want. So I really think that this is an area that could become a big battle in the future. And here's where it gets really interesting. With a stable coin, the Treasury, to a certain extent, can go directly to the market, whether that's with individuals or it's with corporations, rather than having to go through the banking system. Now, the battle between the banking system and politics and the Federal Reserve and the private markets and the public, I mean, this is a big deal. I mean, the banking system is probably the biggest single power player in private industry, that there is. And so, civil wars have almost broken out over banking systems and monetary policies, because banks and monetary policy, again, once you lose control of money and once you lose control of monetary policy, it isn't very long before governments end up falling along with it. So who controls the money and who controls the monetary policy is extremely important from a government perspective. And if you think about it right now, the way it works is we'll even use the gold. People have talked about the Treasury could rewrite up gold and bring it to market rates, and there all of a sudden they'll have a couple $1 trillion that the Treasury could then spend. They can't currently do it without the Fed, because the Fed is their bank. And so they need under the current way things currently work, they need a bank to do their monetary control mechanisms. With a CBDC, it wouldn't be a central bank digital currency, but with a stablecoin, they can potentially subvert or go around the banking system, because they could just have individuals or companies open accounts directly with the Treasury. Now, again, this isn't there yet, and I'm not saying it's necessarily going to happen, but it increases the possibility that could happen. And as a result, this fight between the Fed and the Treasury could become very, very big, and it could become very ugly. But think about it, like if you could interact with the Treasury, and you could have, if you could hold a US dollar balance without using a bank to do it, then why do you need the Fed? What's the Fed's point if they're no longer, overseeing the banks? So it gets pretty interesting if this were to go down that path. And where it goes even further from there is banks versus corporations. And what I mean by that is, let me go back to here, because I think that I need to go back here for a second. Going back to the US Fed versus the Treasury Department. Again, depending on how these stable coins are rolled out, I don't know exactly how this is. I don't know if they're just going to let anybody launch a stable coin, US dollar stable coin, as long as they follow certain guidelines and have certain transparency and, commit to following certain regulations. Or maybe they will grant, 20 licenses of officially sanctioned US dollar stable coins, and they'll give it to the 20 biggest banks, right? I think that would also be a way to then probably roll up all the smaller regional banks into the big banks. And I think ultimately the government would love to have 20 or 30 really, really large banks rather than all these small community banks. Now, I think that would be a disaster from a economic standpoint, but from a control standpoint, I think the government would probably like that. And the reason is because if you gave a license to 20 different, let's call them large banks or institutions, and allowed them to issue a US dollar stablecoin, and then the US dollar stablecoin as a method of payment and transacting became popular, people could move their dollar balances from the small regional banks to these larger, 20 banks that offer a US dollar stablecoin, and that would drain the deposits of these smaller regional banks. And it would make the smaller regional banks go out of business quicker, and it would make the mega banks larger and more secure, for lack of a better way of saying it. And that itself becomes a battle, right? So there's all of these ways that this rise of the stable coin can have enormous impact on the economy. But then it's not just the banks. Maybe they'll let big corporations issue their own coins. Maybe Google will launch Google Coin, and Facebook will launch Facebook Coin, and Microsoft will launch Microsoft Coin, and IBM and GE and JP Morgan. Maybe they'll all have their own, right? And then you get into these battles between the banks and the corporations. Who's going to hold the dollar balances? Now, as of right now, the stablecoin issuers now, they have relationships with the traditional financial institutions who custody the assets for them. As an example, Tether, which has the biggest US dollar stablecoin, has accounts with, they have them with a number of different accounts, but I think, I think Cantor Fitzgerald is their biggest custodian. But if you got into a thing where stable coins, here's where it could potentially get into. And again, I don't think this happens right away. But right now, part of the reason that Tether has an account with Cantor Fitzgerald is because that is the way that you buy a treasury bill. You need a brokerage firm or a bank to do that transaction for you. And then you custody it with that traditional financial institution. But you also have the ability. You have it yourself. Banks have it. Institutions have it. You can go directly to the Treasury and buy bonds. You can do that through Treasury Direct, in which case they sit with the Treasury. They don't have to sit at a bank custodian. So theoretically, at least, the Treasury could issue bonds directly to a US dollar stablecoin owner via the Treasury Direct site, and it wouldn't even need a banking institution to do that. Now, I think that gets pretty extreme. I'm not saying that's going to happen. I'm just saying it could happen. And so theoretically, if these large corporations now get into the US dollar stablecoin market, if they're allowed to, and if they decide to, then you could potentially get into a situation where banks and corporations are fighting for deposits. And, again, whoever controls the money in many ways controls the world. And so I think this is going to be a battle royal between banks, corporations, whoever is allowed to offer digital stable coins, US dollar stable coins. And there will no doubt be, the other thing, I didn't even get to this, I'll back up a little bit, digital fiat versus digital fiat. Other countries are going to launch their own digital euros and digital yuans, et cetera, et cetera. Now, I think for many reasons, it's not really going to matter because I think the US dollar has already won the fiat versus fiat battle. But Christine Lagarde was out this week talking about the digital euro. I've heard talks about the digital yen, and I've heard talks about the digital yuan forever. I'm sure countries, no doubt about it, that have the ability to fight back versus a US dollar stablecoin will absolutely do it. But there's going to be many smaller countries that aren't going to have the power or the ability or the technology or the means to fight back. And so I think largely the US dollar stablecoin has in many ways already won this battle just by being the first mover. 99% of stablecoins are already in US dollars. And then it's just kind of a derivative of the biggest network in history, which is the US dollar network. But it doesn't mean battles won't take place, especially in the larger countries who have the ability to fight back. But this is, I think this is a big area. I don't have all the answers on all these things yet, but I think these are the battles that are going to be playing out over the next, 1 to 5 years. And it's going to be really, really interesting to see how all this plays out. In any case, that's kind of it for this week. Kind of a short one, but I hope you guys all had a good week. Again, if anybody's interested in the paper that we wrote, you can go to Santiago Capital Research, and you can find that by going to research.santiagocapital.com. Again, through Friday, the stablecoin report is a pro level report. But if you sign up for the premium service, you do get access to that one pro level report through this coming Wednesday, November the 5th. In any case, we'll be back again next week, back home and doing it from our regular setup. But in the meantime, good luck, and we'll talk to you soon. Bye-bye.